Hi traders, the Dow Jones has broken to a new all-time high following the weaker than expected weekly jobless claims data and an inline inflation reading earlier today, which has cemented expectations that the Federal Reserve will cut interest rates in September, and there could be maybe 2 more rate cuts to look forward to before the year is out. And that sentiment has pushed the stock averages in the US to new all-time highs, and the Dow, following a multi-day consolidation period above that 45k resistance level that was taken out in end of August. That level basically held, and we consolidated above it for a few days inside this consolidation pattern. But as you can see now, it has broken higher to a new record high, taking out interim resistance at around 45,760-ish. This black line here. This level is going to be very important in terms of support now. If we get a rounded retest in the coming days from above, we could see a nice bounce there. But if that level fails to hold, then that could put the bulls in a spot of water, although the downside could be limited given the overall bullish price action on the Dow. Key support below that is obviously that 45k level, which has been a significant level in the past, marking the previous record highs in 2024, earlier this year, and again a couple of more times over here before we finally broke above it. So that level is going to be very important to hold now as support. If it were to give way in the coming weeks, then at that point the technical direction would change to bearish. But for now the trend is bullish, and we could see more gains in the days ahead. Things have been a little bit more quiet for the European markets, although they too remain on the ascendancy. The FTSE has broken its short-term bearish trend line that was in place for a few days, and it has since started to trend higher again, reclaiming the 21-day exponential moving average. So it looks like the FTSE too is going to hit a record high above 9,360 that was achieved on the 22nd of August. Key support now comes in at around the 9,190 area, which was previously resistance and support as well. And for as long as the index remains above it, the path of least resistance will be to the upside. But if we were to break below it in the coming days, then that could pave the way for a potential retest of that 9,000 level, which is a critical level now. Below that is the shaded region, which was also previously a major resistance zone, and it hasn't been tested yet as support once we broke above it. In the FX space, the dollar has continued to weaken following the jobless claims data released earlier today, and that comes hot on the heels of the weaker than expected non-farm payrolls report, as we found out last week, and not to mention those big revisions as well. So it looks like the market is pricing in multiple rate cuts from the Fed, and they are selling the dollar and buying foreign currencies. One of those being the euro, and the euro didn't fall on the back of today's rate decision from the ECB, which was a hold as expected. And so the euro dollar has resumed higher here after it broke above the resistance trend of its consolidation pattern to the upside, and resistance at 117, and that level is now going to be very important in terms of support to watch. So from here, it looks like the euro dollar could be headed above the July high of 118.30, which is the next logical target from here. My favorite chart is the Aussie dollar at the moment because of the ongoing risk sentiment and the dollar weakness, which makes the risk sensitive Aussie dollar and indeed the New Zealand dollar among currencies that could outperform after underperforming the likes of the euro and the pound for several quarters. So now we're starting to see some bullish price action here. Following a lengthy consolidation, the market has decided to hold above the 200-day moving average and make new highs. Today we are testing a new 2025 high after breaking above this summer high of 66.25. This is a clear breakout, and for as long as we hold above that breakout now, the path of least resistance will be to the upside. And from here, we could be heading up to the September 2024 high of 69.45 next. For more market updates and insights, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.